Good morning, everybody. It is January 5th, 2021, and we are talking covered calls and cash secured puts with Kirk Spano, fundamental trends, and margin of safety investing. And I run an investment advisory for anybody who doesn't want to do it themselves. There you go. Enough of that. All right, so we do a screen every week using bar chart because it's the easiest one to do. You don't need to subscribe to this. If you already have charting capabilities, I will show this to you every week. All right, so my screening, which is of all the stocks that have been in our plug and play, including the current and the past, shows that there are only 17 stocks to consider, 17 options to consider selling, puts to consider selling. And you see that one of them is BABA, which I'm ignoring right now because I'm scared of the Chinese communists. Then you've got Ford and Microsoft. I want to look at Ford because Ford is one of our focus stocks. And I think that once they announce their plans with regard to EVs and hybrids, which is coming shortly, you're going to see this stock break out. And I think you're going to see Ford get back to its all-time highs. How high is that? Pretty high. All right. So I think this stock is going to at least triple or quadruple in coming years, next 3, 4, 5 years. And I think that you can ride that wave by getting in now. So I've gone through all the reasons why I think Ford is going to do this. I'm not going to do that again today. But it's clearly in the buy zone that we've set. It's coming off a crash where it had been trending sideways, fell off with coronavirus, had to take on a little bit of debt to get through it, but everything seems to be working out for them, and their technology, as I've said in the past, is just awesome. So you see, let's go back to 2018. We always want to include 2018 because they had all the volatility. Right now, it's running into selling, and then this hole right here probably means a little bit more selling. So you're probably going to see Ford get down to around 7, but it's already getting a pretty good price on the options. So let's take a look at, let's see if it'll let me do this. Let's take a look at Ford puts. Somebody asked me about this yesterday. So we go over to the option chain and Schwab here. So I want to go with, okay. All right, so let's take a look at February and March. All right, so let's take a look at Ford, February and March cash secured puts. The monthly, $8, you get 28 cents for. This would pretty much get you assigned if it falls. I think your odds of getting assigned are pretty high there. So 0.28 divided by 8. You're making 3.5% on your money to have your money held for about 6 weeks. So multiply that by about 9. You have an annualized rate of around 30%. So for an annualized rate of 30%, you can sell the 8. If it's assigned to you, your net cost is $772-ish, which I think is pretty good. So this is the one I would be selling. I'd be selling the February 8 because it's good income. Right? It's like adding a 3.5% dividend. If the stock drops down to 8, you get it for a net cost in the 7s, which I think is probably ballpark where the stock price is going. Now, you could wait a little bit because the stock isn't quite oversold yet. The way that I do this is rather than waiting to enter the order, I just enter the order and then I change this price. I change what I'm asking for. So if I think that Ford is really attractive at $8, right? If I'm pretty sure it's going to $8, the difference between today's price, $8.50-ish, down to 8 is 50 cents. So the very simple thing to do is just add 50 cents to this. And that's not a perfect way of doing it. If you want to go through calculating the gamma and things like that, right, the sensitivity to price change, you can do that. But I would probably just put a price in here of, say, 80 cents, right? I like round numbers. Put a good till cancel order here on at 80 cents. If it hits in the next week or two, that means you make 10% on your money for a month or 5 weeks or whatever it ends up being. Huge annualized rate. You're using volatility to your advantage. And by setting the limit order, you don't have to be right in front of your computer to do it. So I would set up puts at 80 cents for February 19th. That gets me a net cost of $7.20 if the stock is put to me. Frankly, I kind of hope that it is. And if it's not, I've maximized my income. So using the RSI as a good indicator, look, it's turned over. See where it got here and then here and then here. You know, it's probably going to get into this range somewhere. So it probably has a little further to go on the downside. So I would just set the limit order anticipating it gets to here and my order gets hit. If it doesn't get hit, that's okay. Somebody's asked about Nutrien. Now this one's rallied. I don't think you want to sell a cash secured put on this. If you really are looking to generate some income and you're convinced that the market is heading for some jitterbugging, you see that the big buying pressure is probably going to end right here. Right? These are people, this is from people who sold as it went down. See how this line and this line are similar. So that was the selling as it exhausted. And now you've started to get buying, but you're going to run into resistance right here. You've got a fib line here and a fib line here. So let's go to February 19th. It's still on a rally. Your MACD seems to be peaking. So if you own Nutrien, I think probably you can really look at trimming it between this line, right? So 50-ish, and especially if it gets towards 60-ish. So a $50 covered call gets you $2. That's their whole dividend for the year, I believe. Put the call ratio, look at that. Nobody's buying puts. So that means people are buying some calls on this, pushing it up. That's important information. All right, so the annual dividend rate is $1.80. If you own Nutrien, feel like you're getting close to a sell price, this 50 is going to get you $2.15. That's like doubling the dividend for the year. You could simultaneously sell a $55 put, collect almost $8 in premium, and if it goes above 55, you just lose you lose the stock and it doesn't get put back to you. If it's between 50 and 55, your shares get called away, but then you have new shares put back to you. So this is a pretty delicate trade. I actually think it's a pretty good trade because where RSI is. So it looks like it has a good chance of being called away from you and a good chance of not being put to you. So depends on how much space you have in your portfolio, but trades like that where you add all that income, I mean, the worst case scenario is you end up owning more Nutrien and you have $8, give or take, in your pocket. And the new shares are at a net cost basis of 55 minus 8, 47. I don't know that it's a good trade for people who have an oversized position in Nutrien, but for people with like 1 or 2% of their money in Nutrien who would be okay with that going up to 3 or 4%, that's something you can do. But otherwise, I think that writing this covered call, given where the RSI is pretty good. Even adding just 45 cents, if you don't want it called away, sell this one that's out of the money, get your 45, 50 cents. We'll see you net out 45 divided by the 50 that it is now, times 12. You know, you're adding a pretty good return there, you know, adding another annualized 10%. So depending on whether or not you want it called away, whether or not you want to get aggressive, I think these are the securities that you look at right in here. So the person who asked about this says they're not really looking to sell it. So I would probably sell this $55 covered call, right? Again, and I don't know what your cost basis is. I'm guessing that you bought it around 40 or a little lower like the rest of us. So again, you know, you're taking a look at 0.45. Let's say that's what you get net. If your cost basis is 40 times 12, because it's about a month out, you know, you're adding a lot of income there. So selling these out of the money covered calls when the RSI is way up here, a lot of times you're not going to get called away. and you're just going to collect that premium. And if you do that 2 or 3 times a year, that's about as often as you can do it, 2 or 3 times per year on that security, now you've added, maybe you add another $1.50 in income, which is almost like doubling your dividend. All right. So we've looked at Ford, we've looked at Nutrien. The 2 REITs that I want to look at today, about 4 or 5 others, and I'm trying to figure out who I love the best. I know that everybody likes to have like 10 ideas a week. Even with the AI that I use, you can't get 10 ideas a week. Anybody who is putting out 2 and 3 and 4 and 5 ideas a week, they have got to have a really good system just to find that many. And usually you run into big dry spells because a lot of times the ideas come all at once because of valuations in the market. So here you go, Erstedt Biddle. We've talked about it before. It is in the suburbs of New York. And you can see how it chopped along forever. Right now, you're getting a pretty big discount because it will eventually get back up here. These are grocery store anchored strip malls for the most part in the suburban area of New York. So this should rise 50% in the next year or two. It's got a little bit of a downturn here. Will it get back into here? Probably, be my guess. So I think we've looked at this before, and there really isn't an options market, but I just want to show you how these things look when there's not much of an options market. So this has thinly traded options, right? So you have to be very careful with how you enter your orders. I think that you can sell this $12.50, set your limit price for say 50 cents and let it hit you. Because if this corrects, typical retrace would be about half the distance of the bottom to the recent high. So you're looking at 9-ish to 15-ish. So you'd expect it to drop about $3 into this 12 range. We can chart that out. Okay. For charting purposes, let's look at the daily chart. Go to here. And what we've talked about in the past is that the buying pressure usually moves up. So as this price comes down, if this buying pressure moves up, I would think that it has pretty firm support between these 2 lines. You got your 0.5 line and your 618 line. You've got your buying pressure down here that probably starts to move up. So if you can get this stock in that, close to 12, I think this is where you're starting to get super attractive down here. But even up here, I think you're pretty attractive. Because again, switch back to this weekly chart, you see what their true range is, right? This is where they're going to get back to. I think this is a pretty easy ride, especially if you buy it in here. And that's a super easy spot. Now, could it stop falling right around 14-ish? It could, and here's why. There are plenty of real estate letters out there, and this is one of the ones that's on their radar. So you've got people who are crazy about REITs that know about this stock, and it might not go down too far. So I'm pretty exclusively going to be looking at this. This gets down to about this level. I'm not expecting this, but look where it gets to. You got to there and here. Got a little oversold in 2018 because of what happened in 2018. But here, here, here. So I'm looking for an RSI in this area to want to sell puts or buy the stock or both. Does that make sense? All right, so let's take a look at Store Capital. This has been one of my favorites since literally I was buying it the first time at the exact same time that Buffett was. These strip malls, triple net lease, so that's nice. They have their rents back up to like 88 or 90%. They're probably not going to get paid back for missed rents. I don't think any of them are going to. So the companies that talk about collecting the back rents, all they're really going to see is firm forward rents as a condition of, extending their leases. You're not going to see big payments for rents that were missed in April and May and June, and however long that they missed them for. This is a problem that EPR has because there's no way AMC is paying them back rent. And I'm not sure AMC might even have gone bankrupt in the last day or two. And the rumor is that it's coming. So anyway, we take a look at Store Capital, and the value of the real estate that they sit on I love. So this is a triple net lease company. I think that this area right in here, it's pretty clear that they're going to get back to their highs. This high. This is the juiced high. And it'll get there someday. But what you're getting here is a lot of safety and a pretty good dividend. So if you like safety and a pretty good dividend, and you're willing to have something that maybe in the next 3-4 years, I think is going to, get back up to 40 something, this is something that you look at on the pullback. It's just starting to turn over on the RSI. And if RSI gets down into this range, you're going to probably want to sell a put or buy the stock. So if we take a look at Store, it's not as low as I need it to be. I think I want to go all the way out to, well, they don't have. Let's take a look at April. $30 cash secured put is about 75 cents now. That's kind of expensive for where the stock price is. So that means that there's some implicit volatility there. Let's take a look at what their put to call ratio is. I think that's pretty cool that Schwab puts that up there for you. So there's some people betting on a fall in Store, right? Put to call ratio on Uber, Bitstat was 0.2. This one's 0.9. So there's people banking on this one to fall. What would I do? I would probably do the February 30 cash secured put, and I would raise my bid on this. If it drops 250, that's implying about $1 that you should add to this. Time value coming off. I would probably put my order in at $2 and then watch it as the days go by. So this is something that you'll have to take a look at every afternoon after the market closes to see if you want to adjust it. But I would set up a good till cancel order to sell the $30 put at $2 because this is a stock that you want put to you. This is one that you want to own. Now you could sell the $27.50 and maybe set this for $1 if you already own some and you only want it really cheap. Net cost of $26.50 versus a net cost of say $28, because the implication is that those moves are worth around $1. Is that making sense to folks? How I'm talking about thinking about this? Yeah. Okay. So these two REITs, I think, are going to come back to you a little bit. So I often do 2 boxes. This is the yellow box, the wide buy zone. I think there's a decent argument for buying Erstat Biddle in here, which is almost what it's on top of. My preference is to buy it closer to 12. I really do think the market is shaky right now. So I'm cautious. I know people are, I've watched it and I'm seeing today what I saw 13 years ago and 21 years ago. I'm seeing the same desire by people to crank up their returns in an expensive market that I've seen other times. And it's just a rinse and repeat thing. I promise you, the stock market's going to come back a bit. Now, how far back does it come? Does it come back to like 3,400 on the S&P or 3,100 or 2,700? I don't know that. The charts tell me that just above 3,000 on the S&P or a couple hundred points below. So 2,700s or 3,100s those are the two zones that I really think are likely. And the drop down to 3,100-ish would be just barely a technical bear market, right? A 20% drop. And then into the 2,700s, you're looking at, a significant event, down 30%. I think one of those two things is going to happen, which is why I don't just want to chase things. But Erstat is one of the stocks that's closest to being able to buy safely because they're getting all their revenues back in and their historic range is up here. And I think you can see how fast this is going to move when it moves. So I really want to get this one on the volatility. Microsoft probably too expensive to sell puts on for most people. So there's hardly anything that the screeners are saying to sell puts on. So let's take a look on the covered calls. See the difference? 300 potential covered call sales. And let's change which screener we're looking at. So this one is a tighter look. Disney, we talked about that last week. Freeport-McMoRan, I actually think you probably want to trim. Who owns Freeport-McMoRan? Yeah. So I do have a question for you. I give people ideas all the time. I talked about Freeport-McMoRan down in here. There's two groups of investors, and I'm trying to figure out which one is in the majority of my readers. So I got 400-ish subscribers. I'm getting the impression that most people just want to be told when to buy and sell. And I know there's also a group that's more sophisticated that just wants the information and they'll do it themselves. I guess the question I want you to think about is, do you just want me to tell you to buy and sell? I know it's easier and it lets you off the hook for some of the responsibility, which is why I don't like doing it that way. I want you to take responsibility for your own money. But a lot of people, I'm just telling you, I've had half of my subscribers cancel over the last several years. I mean, more people come in than leave, but there's, the retention rate is just over 50%. And the number one complaint is, you're not telling me when to buy and sell. So I guess I have to do it. And I'm going to have to put in language every single time about it's got to, be right for your asset allocation and risk tolerance and blah, blah, blah. But when I talk about these stocks down here, you should be looking at it and trying to figure out, okay, Kirk says this is probably the future of the company. It's oversold, right? Right here was oversold on the RSI. It went on this tear. And now it's overbought on the RSI. Not only should you be selling covered calls, you probably ought to just be selling most of your stock, because the upside is only a few bucks and the downside is, way down here. I mean, I think the highest that you can rationally buy it is about 20. So that means you're probably looking at a 30% drop here. Granted, it's copper and gold, and I might be tempted to buy it in this area. But just look at that chart. You've got to take off, depending on where you bought it, you've got to take off part of your position. 20, 30%, 50%, 70%. I don't know. It depends on you. But you have to sell something. When these charts look like this, when you get an RSI like that, okay, so let's take a look at RSI right there, January. Look what it did. Overbought, came down until it was oversold. It went back up. You can go back years and years and years on Freeport-McMoRan, right? Overbought, zoom. Oversold, zoom. These overbought and oversold signals are so simple to use if you use the weekly chart. Now, if you want to trade shorter term, obviously you have to use a shorter chart. You have to use the 1 day, the 4 hour, the 1 hour, the 15 minute, depending on how often you want to trade. And the technicals work more the shorter the duration until you get really short. And then you're competing two heads on with the computers. When you get down to minutes, you're just working too hard to beat computers, and you can't do it without your own supercomputer. December 8, 2018, I said to take a look at Freeport-McMoRan. Oh, right here. Okay. Yeah, so, it chopped along, started to rise, and then coronavirus. So this is something we're going to say, well, it was a good idea here. Must have been a really good idea here if the world doesn't end. Oh, yeah. Well, yeah, I mean, I did tell people to buy on December 24th, 2018. I even told them the Friday before that I thought that might be the bottom day. Yeah, I wish I had made this trade as well. I do. Things make so little sense. The thing that I worry about truly is that all the Fed money just pushed the timeline out for a consolidation or in a big correction. So we got the big correction because of coronavirus. Does that mean the stock market consolidates? So I put this up. This is the chart that I have in the article, actually. Imagine if coronavirus hadn't hit and there hadn't been all the Fed intervention. Would we have just gotten a choppy market, a consolidation for a year, which is what I had forecast, and then seen the rally later on? I think it would have been more like this, right? I think it would have stretched out. So now we're all the way up here, and we've been bumping into this trend line. And look how it hits right on this trend line. I drew this months and months ago. We just keep hitting this trend line. Now, does it just hug it, just keep hugging it all the way up? Well, that means it'll be a whole year before it gets to 400 on SPY. But that's not a bad year, is it? Can it just hug and hug and hug and hug and hug and hug? Theoretically, it can. It's never done it before, but it could happen. My expectation is we get a correction to at least here, right? That 340-ish area that I mentioned. Probably down in here, low 3000s, and maybe down in here. We'll see. There's just so much interference with the fundamental mechanisms of the market in the short term through the monetary policy and the fiscal policy that we have to measure things differently now than we did 12 years ago, 13 years ago, 14 years ago. And it keeps changing because the government and the central banks keep doing more and more extreme things. Will those things always work? I don't know, maybe. I don't think so, but maybe. So my expectation is for a correction down to here. And if this happens, this line right here, about 340-ish, maybe 346. I guess you could go up to 346. We get this correction to here, which kind of coincides with that line, with that level. That should bring everything down 10 to 20%. And that might be your chance to really start being a big buyer. All right, let's wrap it up. I'll have a good list for you this afternoon. I'm going to look at how things close before I put together the list. So I'm going to finish the plug and play stocks today. I'll get a option article out tonight, and then I'll get the ETFs done tomorrow. But the ETFs will be pretty easy. There's only a couple minor changes. All right, have a good afternoon, everybody.